Thank you so much for your time today on the show, Femi. We're seeing the equities market witnessing a strong rebound yesterday as the market gained 1.73% to start the week. Meanwhile, the fixed income and FX market traders are anticipating maturities worth about 1 trillion naira to come into the markets today. I'd like to get your thoughts on the sentiments we're seeing in the financial markets today.
Hi, Kenneth. Good morning. Well, look, we're running down 2020 already, and what you're likely seeing in the market is basically portfolio managers trying to reposition themselves for the beginning of the year. The maturities in the fixed income market would obviously drive liquidity over the next couple of weeks. My expectation is that the central bank would like to make sure that there is significant liquidity in the markets as we wind down the year. But these are interesting times. The recovery that we've seen in the NSC this year in itself has been a bit surprising given the way the economy has behaved. But again, I think we all know that most of the recovery that we're seeing in the stock market has literally been driven by liquidity flows. As yields have dropped dramatically in the fixed income markets, the equities market have been the biggest beneficiary of that, as well as portfolio reallocation from the pension funds who are looking more on a long-term basis and seeing the kind of entry levels that we've had for the Nigerian market. This just looks like a good place to go back into the market and see some level of growth. But what is becoming clear is that the market is probably running out of steam. The rally we've seen is running out of steam. In the last month or two, the market has been more or less flat from the race that we saw at the beginning of Q4. But interesting times indeed, Kenneth. I think that portfolio managers are going to be focusing a lot on the macro news that we get and preparing towards full year 2020 results in the beginning of the year.
All right, now it's quite interesting times, like you said. Looking at the what's playing out here, central bank governor talking about the challenges from the supply of the foreign exchange in the country. We saw the external reserve dip by as much as $269 million in about 5 weeks and fell to 34.95 billion just like yesterday. CBN governor says the decline in crude earnings as well as the retreat of foreign portfolio investors significantly affecting that supply. I'd like to get your thoughts on the outlook for the currency.
Ken, we've been talking about this for some time, right? We think that the central bank is playing the role that you would expect, even though the headwinds against whatever it is the central bank is trying to do, the headwinds are very strong. And those strong headwinds means that the bank has to make decisions on the fly. And that in itself is a problem because the sort of reaction that you're seeing from the market is that the technical, interventions that we're seeing from the bank isn't really putting a long-term spin on any strong recovery of the currency. So naturally, we all need to expect that the naira will continue to be under pressure. The fact that we now have a vaccine for COVID-19 in itself isn't a quick fix for the economic damage that we've seen. Foreign portfolio managers are still playing safe at this point in time and sticking with developed markets because you just have to think about it in the long term. We're at the biggest risk of a post-COVID recovery. The biggest risks are in the emerging markets because most of the emerging markets have very limited buffers, either budgetary or monetary buffers that will protect them from a significant rally, that would protect them from, the aftermath of COVID. Now, so it's very clear that the market has those concerns at the back of its mind, and it's the reason why if you look at the flows of FDIs that came in Q3. We're talking about literally less than $400 million. That's probably one of the lowest that we've seen even prior to the recession and that we've just technically entered. Look, so the truth for me is that on an outlook basis, I do not see any positive drivers for the market. Everything that could ensure that Nigeria has significant dollar flows are under pressure already. Crude oil prices, yes, they've recovered to about $50, but we're still seeing our volumes drop dramatically.